Hi friends, welcome to A to Z Learning channel. Today in this video we will talk about Yesbank's latest quarterly results. Yes, earlier today they published their quarterly results for financial year 22, and those results, how are those results, what it could do to the performance of the overall stock. Is Yes Bank now on the mend? Is it coming out of all the doom and gloom that we have seen as an investor in the Yes Bank? So we'll analyze all the results in greater detail for you and help you understand what has happened in the last quarter, and most importantly, what does it mean from a middle to long term perspective as an investor in the Yes Bank stock. So without any further delay, let's commence our video. So for this video, we'll take you straight to the NSE website where uh, they have provided their results information. So we'll go into the investor presentation. So you can also go on the NSE website and just type Yes Bank, and under the corporate announcement, if you look for the latest results, then you can find the results. And if you come down to the investor presentation section, you'll see a document that has come on your screen right now. So let's first understand the quarterly update. So what are the key highlights? So the highlights, if we talk about and look at the profits first of all. So profit wise, the good news is Yes Bank has had profits in this quarter at 207 crore, which is the highest ever since December 2018. So it's a long time coming. The whole of 19, whole of 20, and now in the second quarter of 21, we are seeing them having a profit of over 200 crores. So those investors who've been invested in this, who have not been able to come out, good news is that profits are now turning. So they are turning towards the upside. So this is very, very good news. Asset quality, let's look at that. So if you look at the gross NPA, it's currently about 28,500 crore, which is 15.6%, and it's lower by 100 crore quarter on quarter. So Q1 21 calendar year and Q2 21 calendar year, there is 100 crore less in terms of gross NPO. If you look at their overdue book, which is means any loan that is not paid for more than 61 days, the same has been reduced by almost 1,250 crore quarter on quarter. Again, very good news there. Now let's look at the growth. Growth, the CASA ratio is an important benchmark. So CASA ratio is basically current account and saving account ratio, and this is the way banks get their deposit, which they then lend to the customers to make money. So CASA ratio is always an indication how strong the bank is. Usually it is said that a CASA ratio of over 30% is a good one. Yes Bank has had issue. Their ratio has been more like 25%, but it is improving. First of all, customer deposit, it's roughly now 1.59 lakh crore, which is a growth of 47.2% year on year and 2.2% quarter on quarter. Very good result. CASA ratio is now 27.4%, which is 130 basis points up quarter on quarter. So overall, if we see, and similarly, if you look at, as you know, under Prashant Kumar's leadership, bank wanted to move away from a corporate banking house to a retail banking house, and their overall aspiration is to get to a business book where 60% of their loan book is retail and 40% is corporate. They are coming closer to that. Their current mix as at the 30th June 21 is 53% retail book, 47% corporate mix. So they are on the right path there. So those were the kind of key highlights. And in summary, you can say that there's a lot more positive news coming from the bank. Let's look at their performance against the strategic objective. So as I said, CASA ratio, their target longer term for financial year 22 is to get to a place where CASA ratio is more than 30%. It remains on track. They're already at 27.4%, which is higher than the previous quarter and consistently improving from last year or so. Retail corporate mix, again, we've talked about 60-40 is their aspiration to get to somewhere between financial year 23-25. So next 3-4 years they'll get there. And they are moving really nicely. Financial year 2020, they were at 44% retail book, 56% corporate book. Now they are 53% retail book and 47% corporate. So they've already almost reversed the mix, but they need to kind of get to 60-40. So they remain on track. Some of the advances growth, whether we look at wholesale or retail, I think those need to be recalibrated, bank is saying, in the context of pandemic situation. But if you look at their other issue which bank had was that they were leveraged quite heavily. They were leveraged to the extent that their credit were far higher than the deposit that they had. So in 2020, their credit to deposit ratio was 162%, means they were relying on the overnight money uh, for their for their credit commitments. And if credit commitments don't pay back, they were in serious trouble. That is, their long-term goal is to kind of bring that down to less than 100%. Good news is, at the end of this quarter, they're already at 100%. So it's again in the right direction. Similarly, recoveries are showing good results. So overall, I would say that some of those stats and their strategic kind of direction of travel from a performance perspective look very, very promising and confident. There are some negatives also. For example, net interest income. It is down 27% year on year. Though it is up quarter on quarter 42%, but it is down year on year. Operating profits are also down 20% year on year, though they are significantly up quarter on quarter. So I think the bank was in a good place in terms of overall numbers being reported, but we all know that those numbers were less reliable. Bank in the subsequent year had to allow for huge amount of provisions because those were not good numbers. And now bank is on the mend. It's coming out of the darkness of all those kind of restating of the numbers that they had to do. So overall it looks good. So I think if I were to summarize as a retail investor, I mean, you can go through all the detail. There is a full detailed presentation available on the NSE website. But in summary, I would say that I feel this quarter is basically the turning point that Yesbank was planning for last 2-3 quarters under Prashant Kumar's leadership. And I think this quarter is showing those early signs that yes, definitely bank is now in the profit zone, in the kind of improvement kind of zone. Up until now, they were still kind of restating the fact, providing for all the kind of bad loans and getting in the right shape so that they can focus on the travel forward. But now this quarter is sort of kind of confirmed that they have started their journey toward that good future that we're all hoping as a retail investor that Yesbank gets there. What would it mean from a stock price performance perspective? I think overall it is better results than the market that was expecting. So I would think that stock market should to take it more positively, but it's very hard to kind of predict how next day's stock performance will be, or next week's kind of stock performance would be. But I think it gives me confidence that if you look at next 3 months or 6 months, unless something otherwise happen in next 3 to 6 months, bank is definitely has seen the worst. Now it's definitely will see the better days. So that's sort of kind of our view. We would look forward to kind of your comments. If you don't agree with our comments or you have an alternative interpretation of the results, then please do let us know through the comments. And if you like the content that we are producing through these videos for you, then please press the like button and share it with your friends and family. And last but not least, if you've not subscribed our channel A to Z Learning as yet, then please subscribe and become part of our viewers family. Thank you so much for watching our video.